Hey, good morning, everybody. Welcome to Thursday, June 27th, as we get to one day closer to the end of the first half of 2019. I want to thank you for joining us today. I do want to remind you before I get on with Dave about our free report on planning for your retirement strategies. You know, retirement is not something we get a do-over on, so we want to make sure we get it right the first time. And so we put together this free report called Retirement Strategies. Talks about 5 different strategies you want to look at as we head into retirement. All you have to do to get your free copy is text the word retirement to the 863-285-3815. You can also, in our Facebook post, you can look right above this video, and there's a direct link there you can click on and request the same information. And then next, if you like what we're doing here, please share us with your friends and family out there on Facebook, and let's help build our tribe. Thanks, man. We'll talk to you in just a few minutes.
One 105.7 Light FM. Sia is there. Hi. I'm glad you're here. It's 8:40. That be 20 before 9, and it's time to check in on your money and see what's going on Wall Street this morning. We go to the experts. That's why we go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. For a change, we got some government data dump to talk about instead of just gossip on trade, right?
Yeah, we do today. Hey, I'm coming to you from the home office this morning.
Are you there, Phillip?
I'm out here. Can you hear me?
He should be there.
Are you there? Did I lose you?
Let's see it now. Hear me now, Phillip.
Can I hear you? Can you hear me now?
Well, this is interesting.
I can hear you.
Ah, there we go. I got you.
There we go.
We finally made it. Somebody neutralized all my buttons. I'm sorry.
I see. So I'm actually coming to you from the home office today. People from Facebook will be able to see it when they post this video. I'm actually in my home office this morning. So, but yeah, we did get a lot of stuff coming across on the economic calendar, kind of full today.
Yeah, we certainly did. The first one is the regular Thursday release, and that's first-time unemployment claims. 227,000 is still abnormally low, but it was a little bit of an unpleasant surprise from what the markets expected because it's up 10,000 from last week.
Yeah, it is, and we expected it's a little bit more than what was expected too from the economists that I follow. We were expecting about 218, came in at 227, so. I wouldn't call that a huge disappointment, but still a disappointment.
Understood. Yeah, when we start getting down this doggone low to the point where we're below even the normal sifting and winnowing numbers that the economy normally generates, I have a tendency, and I kind of get the impression from looking at the markets, that we blow off little misses when we're, way under 250 and way under 240 like we are.
I think so too, and I mean, given the unemployment rate still, we're beyond full employment, and you just can't complain about that.
Absolutely. The other big one that came out is the final revision of the first quarter gross domestic product, and you kind of surprised me that was a little bit of a miss because when the first quarter first came out, we were expecting it to be an El Stinko quarter. And we're kind of surprised when it was above 3%. The final revision, 3.1% growth during the first quarter, which is generally considered a pretty healthy growth rate. But somehow the market was expecting the Feds to increase it by a little, I gather.
Well, they were. I mean, obviously, that's a great number. 3.1% growth. You can't really complain about that. But the economists that were surveyed by thestreet.com, they came up with a little bit different number. They were expecting 3.2. Again, not a huge miss. It really hasn't affected the futures this morning as those numbers have come out. And so I think that, hey, if we can continue to grow at 3%, then that'll be still a great year for us, given the tariffs and all the other stuff that we're combating against. And then we got one last one that I have, and I know you got a few other ones that I didn't have on my tip sheet. Spending was a little bit of a miss, Dave. Consumer spending was up about 0.9%. The guys I follow were expecting about 1.3%. So we are spending just a little bit this last month.
Yeah, just a little bit of an increase in spending, which I guess, okay, fine. We're looking at May. That tends toward being a relative doldrum month anyway, as people start ramping up and getting ready for summer vacations. But a miss is a miss is a miss. That's true. The other thing that really doesn't, I suspect, affect a lot is we got the report on first quarter imports and exports. Exports in this country rose by 5.4%, imports by 1.9%. So the ratio between the two somewhat improving, but it needs to be said this is all for the first quarter, and that's before we started screwing around with all the tariffs. So I suspect Wall Street investors will kind of blow off that bit of good news, saying everything's getting warped anyway, wouldn't you assume?
I would agree because the tariffs hadn't kicked in, and so that number doesn't mean as much now because of all the outside interference we're getting when it comes to tariffs and how that's going to affect imports and exports.
Yeah, one thing I've always said, it's considered axiomatic in the economist world that tariffs are never a first choice repair for anything because they do tend to warp the economic behavior of countries between them. So we'll find out how it's warping it when we get second quarter preliminary figures in, and that'll probably be on the way as soon as the government can vomit them up if they're good news, I suspect. Yesterday,
Yeah.
yeah, yesterday was a mixed bag in terms of the indexes, and we didn't have too terribly much to talk about in terms of traded issues and reports. I gather we're getting a few slackers on the earnings season that might actually move something for a spell, huh?
Well, we're getting a few things, but let me mention this first because the only index that's really negative right now is the Dow, not by much, but Boeing is again catching some flack.
Mm-hmm.
Evidently, there's been another issue that has been discovered. They're not sure exactly how they're going to fix it. If they're going to be able to fix it through a software fix, or if it's going to have to be a replacement of a chip within each of those systems. So, again, Boeing, at least when I first looked, was under some pressure this morning, still under some pressure, down a little over 2.5%. So that's going to be an impactful stock when it comes to the Dow today.
I was kind of wondering what was causing the Dow to be the only negative that we had, and I missed the story about Boeing and their problems. This is on the same darn plane they had to ground earlier.
It is. It's still the same plane, the Max 737 Max. It just continues to give them problems. Boeing really needs to get their handle on this and get everything fixed. They need to do it now rather than later, and they need to do it with some efficiency to get things back up and running.
And they're going to have to do it with some public relations work too. I mean, public relations classes, they always use the example of the way Johnson and Johnson handled it when they had that Tylenol scare a few years ago when some slug was poisoning Tylenol. They handled it quickly, they handled it well, and Tylenol came back, after a very, very short slump. Boeing's got to get somebody on board that can handle PR in the same fashion because they're just getting hammered. And every little trickle that comes out in terms of news, like the software issue you're referring to, Sully Sullenberger going up and saying every single pilot needs to spend hours in a simulator before flying these beasts. I mean, Boeing is getting hammered almost more in the public relations mold than they are in the tech mold.
Well, they are, and so they need to get that under control and do something. They need to go above and beyond and get this thing fixed and deliver more than what everybody expects them to try to get some better PR coming out of there.
Absolutely. Got a few companies that did have some reports. The one that I saw, I think, did I see reference to Nike reporting?
I did not see Nike on my tip sheet.
Sorry, that must be later on. I just saw it go by my ticker, and I didn't get a chance to look at the headline. What do we have?
So I got Walgreens. Yeah, they're a staple when it comes to drugstores. They came in about 4 cents above estimates. Revenue was also above forecast as well. They're talking about how they're rebounding from the difficult quarter they've had in the past and how they made improvements on both retail and prescription drug growth. And so they're up a little over 3% this morning, which is good for them. They've really struggled the last few quarters.
Good for the Dow too, with Boeing going down because Walgreens is now part of the Dow Jones.
Yeah, so we need all the help we can get there. We got
Yeah.
Accenture, which is a consulting firm, they came in $1.93 a share, 4 cents above estimates. Revenue exceeded the forecast, and they're seeing a big help with their digital and cloud services. But there must be something in the report that I didn't see because they're trading down about 2% this morning.
That's interesting. I didn't know Accenture was involved in cloud services too. That's becoming a field that more and more companies are getting into.
It is. It's becoming commoditized, and so it's going to be who can provide it cheaper and with the best service.
I think
On
so.
the other front, this will be one of interest to you because of your ag and commodities background. That's ConAgra
Oh
came
yeah.
out. They missed by 5 cents a share. Revenue was also below what was forecasted. They just had some issues in some of their business categories, and they're getting hit pretty hard today. They're down a little over 6.5% this morning.
They're a big company. They do both prepared food services and handle raw materials. And there are some challenges going up in row crop country related to weather this summer that have not been favorable to ag businesses. So that's not a surprise, but it's a disappointment.
Yeah. And we have McCormick, the spice maker. All the spices they make, they came in 8 cents above estimates. Revenue, they said, was just slightly below the forecast. And they also increased their full-year forecast. But I guess missing revenue must be having an effect this morning because they're down 3% before the market opens up. And lastly, I've got KB Homes. KB Homes, we had Lennar Homes come out yesterday or the day before. KB Homes, again, same. They beat by about 11 cents a share. Revenue was better expected. They saw an improvement in their cancellation rate, and they have a bigger than expected backlog right now of homes. They're a big winner today. They're up a little over 7% this morning.
Well, I'm glad to have somebody actually getting some positive bounce off of a report. A lot of those sounded good, and then we ended up in the negative anyway, didn't we?
Exactly. Sure did.
One of those mornings. So like I said, it was a mixed day yesterday. The NASDAQ had a bit of a recovery. Dow and the S&P were both, let's just call it pink. We're talking about marginal downticks. In advance of the G20, which a lot of stuff is going to get held on, we're 45 minutes before we open up. Do we have a trend this morning we can look at, Phillip?
Well, we are. It's a mixed bag. The Dow has continued to fall. It's down $20 right now. Still less than a tenth of a percent. S&P 500 is up $5.60, and the Nasdaq is up to $27.25. So both of those are in the green. We got gold and silver both retreating about 0.5% right now, and we got crude oil going the right direction, down about 0.75% to $58.94 a barrel.
And still bumping its nose on 59. I'm still not in love with that number. Get us back down to 54 or 55, Phillip.
Hey, we'll work on it, Dave.
Not sure how, but I can always ask the question. Bonds we've been paying attention to for a whole bunch of different reasons. 10-year bond is actually increasing in terms of yield, up by about 5 basis points from last night this morning. 2-year, on the other hand, and the 5-year, both slightly down, indicating we're still buying bonds on a flight to safety basis short term. World markets, Asian rim markets, generally uniformly up pretty substantially at their close this morning, and Europe is mixed so far through their trading day. Phillip, for finding out how to preserve a retirement and maybe even prosper during markets like this, I need advice. How do I get a hold of you and make an appointment?
Hey, one of the easiest things you could do, Dave, is text the word retirement to 863-285-3815 and get our free report on some different retirement strategies out there. Outside of that, we've got our financial x-ray analysis where we analyze your portfolio for risk and cost. To schedule your free analysis, call us at 382-0037. They can always catch us on Facebook. We repost this every day at Statler Financial Services, and then catch us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
Streaming 24/7 too at newstalk730am.com. Phillip, thank you so very much. We will catch you in the morning. Fair enough?
Sounds good, buddy. Thanks.
Take care. Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything you're.
Hey, again, as we wrap up this morning, I want to remind you about the free report we have on retirement strategies. Just text the word retirement to 863-285-3815. You can also click the link above this video, and it'll take you directly to the page to request that form. And we appreciate you being here today. If you like what we're doing, please share our post and like our page. Have a great day. I look forward to seeing you again tomorrow. And until then, have a good one.